Hey everybody, welcome to Trading Caps Exclusive Analysis. Today is currently October 25th, and as we had another bloodbath in the markets today, the S&P fell minus 1.44%. The Nasdaq, the NDX, the QQQs were even worse. They fell minus 2.47%. And then you look at the Russell 2000, it has actually fulfilled and achieved the measured move downside target of this original head and shoulder. So now the question is, do we overshoot in the small cap indice, or do we start to form a consolidation base, a bearish base to move lower? I do anticipate a bounce, likely even retesting this 167 pivot. That would imply a move of about 2.4% in the Russell. However, with the market closing in the after hours, with Meta giving up all of the gains that it had, seeing some pretty tremendous downside now. Well, not tremendous, it did have a down day of about 4.17% heading into earnings, closing at 299, and now it's trading all the way down to 289.22. So that's a few more percent that it has fallen, about 3.5%. So it's certainly weighing on the Qs. And then you look at some of the other markets, Nvidia also down in the after hours over 1%, Tesla falling. So Nvidia closing at 417, down about $7.73 in the after hours, testing the low pivot from this Monday, the beginning of the week. So it's going to be a precarious spot to see. These markets are likely going to be gapping down tomorrow, but nevertheless, there's still some pretty decent support. So let's just look at the S&P 500, since that's the broader market. So today we closed at 4186, pretty decent volume above average, above the 20-day average. Now, what I want to show you, if you take a fib retrace from your low pivot in October to your high pivot, you're hitting that 382 retrace, that 4176.71 is your key level. I mean, you can adjust it a little bit to basically where we're at, 4181. Call it 4180. That's your big line in the sand. Why? It's a 382 fib, so that's one technical factor that should hold this market. You have this consolidation pivot range breaking basing before you broke out to new cycle highs right there. So it's a breakaway zone. It's also a breakaway gap in the move. You did see a heavy degree of volume in and around this exchange area. It's another pivot resistance point, another pivot resistance point. So you now have three major resistance points, a fourth major resistance point on the SPX. And then you look here, this is a wide range red bar breakdown. This date was Jackson Hole, where Powell actually slammed the markets down. So it's very interesting to see how we're retracing back to that. Now, another factor. Okay, let's take a look at what we're doing here. If you draw a parallel channel all the way down from your high pivot, high pivot, high pivot to your low pivots, to your low pivots, that's another technical support factor, which we're tagging right now. What I think we're going to do tomorrow is gap down and basically breach this pivot. And then I think we're going to see a reversal and get bought back up. Now, after hours does change things because there's obviously a whole host of earnings. Amazon is the big one. So with a behemoth, a multi-trillion-dollar company like Amazon, that could obviously deter things in the after hours. So time will tell. We'll certainly see. The big winner of the day that held its basically its price action to the upside was Microsoft. It did give back a little bit. Huge volume. Let me just erase this here, but it held most of its gains, up 3% on Microsoft. Obviously, there's the first thing we're looking at on Microsoft is that major downsloping trend line, which is breached, and then this trend line now. This could be argued that this is a nice little inverse head and shoulders, and I'll actually draw it out for you. Just bear with me 1 second while I find my drawing tool. So basically, let's draw it with this lock. So here you have one potential shoulder, you have another potential shoulder, you have another potential shoulder, and look what has actually happened. You just broke out of this. Let me erase that trend line so it's easier. You just broke out of this neckline on the daily chart. That's a nice clean break. The upside target of this potential pattern on the second largest company takes you all the way up to about just a pierce of the all-time high on Microsoft, 367, call it that. Now, obviously, that could change under Apple's influence, Amazon's influence, and the rest of the S&P and NASDAQ components that have to report earnings. But the second largest company is holding up. And imagine if this wasn't the case today. Imagine what the market would have been like, especially on the QQQ, this type of sell side. Let's actually go to the NDX. It's a little bit cleaner. Don't have my day trade lines. But look at this support you're hitting. Major pivot to major pivot to major pivot to major pivot. That's 4 massive bounces. Could you break it? You absolutely could. But right now you want to give it the benefit of the doubt. Even if you get through that, you have this pivot at 14,306 as well as 1420. The dollar is the concerning part of this market move. If you look at the dollar's trying to recapture and test this uptrend that it had. It's consolidated now for a couple weeks, and it's on watch for a technical breakout right at resistance. Typically, you want to be buying the indices as the dollar is still at technical resistance, and we'll just have to see if it can pierce through. If it gets through this trend line tomorrow, then it likely tests the double top all-time high, which may coincide with the outer boundary range of this key parallel channel. And then we'll have to reassess there. Obviously, bonds and the 10-year and the long end yields were surging today, so the short end yields were okay, but the long end yields just had a massive surge to the upside. Look at that 10-year move. That's a powerful, powerful move up over on the session. You closed up 2.74%. You look at TLT, the volume that TLT has been trading at. This is obviously inverse the 20 years, just absolutely insane. Look at this volume. It certainly looks like a base is being carved out. Even on the weekly chart, you look at this, but there's a chance that it could go lower. I mean, there's some key areas that I'm watching on the charts. Obviously you want to make it look like that there is a major bottom in place, but we'll have to wait and see. Obviously, you are hitting some decent technical support right now, but it just seems like there's a little bit more move down in this overall market. If we had to throw up a measured move of this here, that move there, and we mark it down, you can see we're getting very close. You've almost had an identical measured move down to these lows here. So maybe there's one more blow off top in rates, or there's even a chance we still go to the downside of this channel. Look at this beautiful parallel channel. If I had to correct this a little bit more, let me just play around with this channel as I do the video live. But if you just play around with this beautiful symmetrical channel, you can see some key resistance points and support points. Let me erase this trend line. You can see on the weekly TLT that there is a chance that it could actually still, maybe even, imagine it went down to here on the TLT. We're talking about a move down in TLT of about 28%. That would be absolutely horrific. But I mean, there is a beautiful symmetrical channel, but look at these support levels that you're hitting. You're almost at the all-time lows of TLT. And if we actually blow that up, that's kind of where the measured move takes you. So a measured move is basically looking at the previous sell-off. So I look at the last sell-off. This sell-off high to this low is basically the marks from this high to this white dotted line, where basically the all-time low is on TLT. So it looks to be that there's going to be maybe one more surge down in rates, in my opinion, which would support the technical factor. And then after that, we'll just have to see. I mean, if you lose this 80.63 on the TLT, that really does mean the 20-year yield is likely going, and I'll show you, if you lose that area, let's go to the weekly chart. It likely means you're doing a measured move in rates all the way to the high end of this channel around 5.7. That would be absolutely astonishing. I mean, you look at this beautiful symmetrical channel, all your multi-high pivots, low pivots at the upper boundary ranges, and then you take this low to this high, and you take this low to this high, that puts you at the top of this channel sitting around 5.7. And that's where maybe the 20-year is telling us that the TLT does potentially still have some more downside. Time will tell, but certainly mega cap stocks got wrecked today. Apple down 1.35, Microsoft holding 3, Amazon down 5.58, Google down 9.6, Nvidia down 4.3, Tesla held up the best, down 1.8, Meta down 4.17. Obviously, Meta is going to be on watch tomorrow for a day trade, where I think a day tradable bounce could likely occur. It's at the bottom of this range. If you got a flush to about, call it 280, there's some minor support here, risky. There's a micro gap fill around 285, give or take. But ultimately, I would look for a move today down there, especially if the market was weak. But I do anticipate that we should see some sort of a bounce off of this level, because once you lose this level, I mean, you have pretty much a move down to 4,054, where I think that would be a major technical support level. But until that, we'll just have to wait and see. Obviously, if you look at the VIX or the UVXY, which is what I like to watch, the UVXY is on watch for this continuation breakout. So this is going to look like a little bit of a inverse head and shoulders. You can see your left shoulder, your head, your right shoulder. You had a breakout confirmed on the daily chart reversed, closed back below the neckline, which in theory technically negates the overall pattern. And now you're trying to break out again. So you want to give it the benefit of the doubt because this pattern still looks very, very beautiful and symmetrical. And right now, we'll just have to see. There's a lot of volume that's occurring here, but really you need to get a high daily close above 20, this pivot high, which sits at around 2018, in order for this pattern to be valid again, in my opinion. But certainly it wasn't a broad market sell-off. You did have some strength in the XLP stocks. So consumer staples holding up, and this was one of the sectors where we were more bullish on, acquiring names like Monster, MNST, sorry, MS, getting a little bit dyslexic right now, but if you look at Monster, MNST, that's what I thought I said. We were acquiring some of that. Sorry about all my lines. They're just a little bit complicated right now. Intraday levels too. That stock actually held up today. And then you look at some of the other names like Hershey, which we've been bullish on. That stock had a terrific move up on heavy volume. So some of the consumer staples are certainly catching a bid. Coca-Cola, another one, McDonald's, I think, has certainly been moving up in the past. So a lot of the staples have been showing signs of strength. Walmart's another one that actually held up better than the broad market. And then you look at utilities as well. So utilities held up, XLU held up. Obviously, this ETF is very skewed for the likes of NEE, Next Era Energy. That one was so oversold to the downside, and now it's starting to look like more of a defensive play. So it wasn't a throw the baby out with the bathwater scenario today, but certainly a lot of things did get rocked. There's also some strength in healthcare, some individual names at this point in time. All right, let's move along to oil, natural gas, and gold. Oil had a big reversal today on the back of potentially Israel launching a ground invasion in the Gaza Strip there. So in the Hamas, but overall oil right now, I still think it could actually head lower. On watch for this beautiful head and shoulders pattern that if we break this neckline, you have a sharp move down from wherever you break it, potentially to $68. Obviously, there's major support at 74. That's kind of where I'm looking for a potential short in this trend. I want to see us get rejected at this daily high potentially tomorrow for me to maybe start looking at an oil short, but it's super risky with this war and announcements coming out by the day. If you look at natural gas is another one that I think has to go down a little bit, although it is putting in a potentially a bull flag pattern here. The big level for nat gas is you want to get above this red bar high on a daily basis. If it can do that, then it actually has a potential to continuation move to the upside. But if we get rejected at this wide range red bar breakdown, even if you're a weekly trader, you can use the whole weekly bar. This is still technically a bearish inside bar weekly pattern. And I do think that we're going to see a move down in nat gas, at least back down to 307. And I actually believe that there's a potential that we could see a move in nat gas back down to about this 290. I would be backing up the truck, or this $3 level. A pierce of this $3 level would be ideal for me, in my opinion, to start accumulating on the long side. So I'm looking at maybe some intraday short scalps in nat gas, since we are approaching the high end of that weekly bearish bar. So just keep that on radar. Some other stocks that got absolutely clobbered. Align, ALGN. This was a market leader for quite some time, and even after heading into earnings, this stock was so oversold, getting completely obliterated on the daily chart. Even on the weekly chart, it was getting absolutely obliterated, retracing to this breakout trend line. And then what happens? It reports earnings and it gaps down. I mean, look at this gap down. What are we talking, like almost 24% down after it was already getting oversold? So this one's coming up into some huge support. I did pick up a little bit of a long position, just a starter position, because I do think that as we approach these major support trend lines in a very oversold pattern, I do think for a day tradable scalp tomorrow, this stock is certainly on watch. Watch these two upsloping trend lines as well as these low pivots over here. Look for some market strength, but this one is going to get absolutely oversold. I mean, even if you throw on, I was looking back at the history of this chart, and basically if you go in the after hours on ALGN, and obviously things can get more oversold, but you throw in an RSI indicator, the stock has, I don't think it's ever been this oversold ever in its history. I went back I think it was all the way to 2008, and it's never been this oversold. So for a quick snapback day tradable bounce, certainly keep this one on watch for a play, because I do think that it's looking, I mean, it even passed through some of my support levels here, but I do think that it's coming up into some massive levels for probably even just a bounce. Like, let's say we hit this 190 level, I think we could get a 14% intraday bounce before the more selling potentially resumes in this overall name. But on that note, I'm just going to flip to Bitcoin, because obviously that one has had a huge move to the upside. Look at Bitcoin's chart, super extended. I still think it has one more final push up in this overall trend, although it's getting extremely overbought on the daily chart. Why do I think it can have a little bit more gas in the tank? Well, you have a weekly potential oversold condition forming, but look at this 382 fib. So if you take a fib tool, draw it from your high pivot to your low pivot in the trend, we're approaching that 382 fib resistance, a previous bounce level here, and a previous breakout level. That level also happens to coincide with this trend line, this pivot high, and now look, we're almost tagging that level. Let me just erase that trend line there. So you can see we have one more little final push up, I believe, into this area. Maybe we pierce it into the 36,000, but I think that's going to be the short level. That's where I'm absolutely waiting for a day trade, a quick, nice pullback day trade short, as well as a potential swing trade short. And where do I think Bitcoin will retrace to eventually? I think back down to 31.7 here. This previous high pivot is likely where Bitcoin could retrace to. So if we get a little bit of a blow off move down, you still have potentially an 11%, 12% range that we can catch on the short side of this market. Let's take a look at gold, because gold's also looking interesting. Look at these moves. So gold moving up in a parabolic nature, on the daily chart, and then you look at Bitcoin also moving up. So what is that telling you? That's telling me, okay, people are looking for kind of a flight to safety in both assets. It's very rare you see a sharp move up in Bitcoin and gold simultaneously. They don't usually have much of a correlation, but in this bet, they are looking a little bit correlated. Gold, I still think, needs to consolidate and move a little bit lower, but due to the fact that you're back inside this upsloping parallel channel is very bullish. If you can hold this and just consolidate, it gives you a real solid chance at basically coming to test this high range of this channel over the coming months. So just be paying close attention to gold, because this is a very bullish reversal bottom, and this could be shaping up to be a big explosive move for gold. Obviously there's resistance points up along the way, but I think if gold can maintain inside of this channel on the daily chart, and obviously if you buy the low end of the channel, you could be looking for a potential, that could be your potential stop loss low if you start closing on the daily chart below this channel. But if gold holds this, we could see a big move up in the coming days. And what would that tell us? If gold had a big move in the coming months to the upside, that would tell us maybe a couple scenarios. There's fear creeping in the market with the war, with something else, or the Fed has finally started to pause and maybe lower rates. The bigger move will come when the Fed actually starts to cut and lower rates, because that's typically when gold starts to really shine. So we'll just have to pay attention to all the asset classes, but it's very interesting to see how gold and Bitcoin have had a little bit of a correlation over the coming sessions. On that note, thank you all for tuning in. Please give this video a big like down below, and we'll stay tuned for more updates.